All right. I think we're good to go here. So let's go ahead and go over this weekend review. Let's go over some of the trades that I made this week. Um, let's go over the portfolio just in general. We'll look at the markets, S&P, NASDAQ, look at some sector rotation, obviously look at the XLK, and we'll look into some of the AI plays that have been going on. It looks as if the run is over in AI, and then we'll look at some oil plays. It looks like oil's ready to break out again, and I'm going to be looking for certain oil stocks this week. So we'll start off here with the portfolio. For the most part, it wasn't a particularly good week. There was several plays in Bitcoin, ETH, crypto in general that I was kind of hoping to take advantage of this week, as well as the ES and the NASDAQ. I thought there was going to be a move higher that did not play out, but I kept most of these losers small. There was a one in ETH that I held on a little bit too long, and it wound up hurting me. Not too bad, but I like to keep this a little bit smaller in the future. And then there was a few plays here that I thought were going to play out in the week with Meta and Google. It looked like there was a rotation out of AI and into some of these Max 7s, and and those did not follow through. Or I just got into them late in the short-term bounce, and I exited quickly once it looked like their move was over. A lot of these stocks have really retraced their moves that they had recently, particularly Google with the Buffett news. I had a trade in HIMS that just did not work out. Again, probably stayed in it a little too long. I kind of lost track of this one. I should have set my stops a little bit higher than I did. I had a pretty good short in MU. Shorted it at 903 and got out about 849. There was a bit of a bounce in the stock. I believe it got all the way down to close to 800 in after hours. And but I think overall I played that one pretty well. Let's see here. There was a pretty good short in QQQs that I took with some puts. That worked out pretty well. And then the Adobe calls that I bought, I wanted to get out of those. Adobe's been acting kind of schizophrenic in a way. It's down big, it's up big, it ends the day in the middle. With the options, you're leveraged, and I didn't want this to go too far against me. I was up, decided to go ahead and take profits. I'll keep the shares of Adobe because I do believe it looks like it's going to go higher, and so I'll sit in shares, which is I'm a little bit more comfortable with that in terms of the risk. I added some SpaceX puts. It looks like SpaceX is ready to collapse even further. I took another play in a software with CRM. I took some AI plays that I'll show you later why I took them, but it looked like they were getting ready to bounce on Friday. And a lot of that bounce got taken back, particularly in SanDisk. And so I had a stop that got hit not too long after I had bought the initial trade. I thought I had set my stop too high, but actually in the end, it actually worked out favorably for me in that it wasn't too much of a loss. These other two plays, AMAT and MU, they look like they want to move a little bit further down, so I'm going to go ahead and exit them early, and pre-market probably on Monday. So I'll take those out of the portfolio. There was really just kind of a swing bounce, and it doesn't look like it's going to play out. So I will probably just exit. If it does play out, oh well, I'll miss the play, but I really don't I really kind of regret getting into these. I shouldn't have gotten into them, but I thought it was going to bounce. Overall, the portfolio is doing pretty good. I'm at 84%, 67% above the S&P, or the SPY in this case. Yeah, I mean, even though I'm having a low winning percentage of only 46%, the average of these wins is significant compared to the losses. So that's kind of the name of the game. Keep those losses small, and try to let some of these winners run as much as you can. In this particular market, it's so choppy that I've significantly reduced the time that I'm in some of these trades, simply because there's so much chop in them that one day, or the day starts out, you're up, and then the next couple hours I'm down. So it's been a real herky jerky type of market. Let's go ahead and look at the S&P. So here's the S&P. As you can tell, it's just been a really, really choppy period, and it's kind of in this kind of bull flag pattern. It doesn't appear like it wants to just completely collapse, which I think a lot of people, what some people are hoping for. It doesn't look that way, but it does look like it wants to resume the trend down. There was a bit of a bounce on Friday. So I can show that. Let's look at the hourly. So on Friday, we opened up significantly lower, and we'll look at the 5-minute on that because it'll be pretty telling. We opened up significant lower, and we bounced, and we looked like it was going to completely fill this gap. It kept on bouncing up against this 7,500, and if that breaks, which we've spent a significant amount of time around, or above recently, but in the past around, if we were to break up there, I think that the bears would be in serious trouble, and you would start to see, you would start to possibly see a bit of a short squeeze higher. And it just could not do much. It completely collapsed. And this was a bit surprising, considering it spent a significant amount of time up against this target that I have. The target's still live, so it hasn't been, it formed on Friday. And so it's either likelihood it's going to get hit again. Now, likelihood it's probably going to be Monday or Tuesday, but there is a chance that this could be there could be an increased risk of failure of this target not hitting, just like this one. When you have these impulsive moves, you're going to leave behind targets. You had an impulsive move to move up. Let's see if I can show you. Let me look at this on the daily. So you had this impulsive move up, and you left a lot of these targets behind. Get rid of this. So when you have these significant moves higher, you leave a lot of targets behind. Eventually these get hit, but because the strength of the market is just pushing forward, these get left behind, and there's just an increased risk of a failure of hitting immediately. Eventually they will hit. Majority of them will get hit. But in the case where, recently we've had this kind of impulsive move down, this July 16th target has not been revisited. And I think there's an increased risk of this July 17th target not getting hit either. And the reason why is because on Thursday, you had this wall, this buy into the close, right? I call it a wall. And the thought is that, okay, it wasn't able to maintain the lows, and there was a buy towards the last 10 minutes of the day. Now, that's generally retail right there. Um, that's not institutional buying. They're not waiting till the last 10 minutes of the day to buy. This is all retail right here. Excuse me. So what happened on Friday was that we had a gap down. So this is this is not a very solid structure here. So it's going to get repaired. What you should see is that it should fill the gap, and that's what I thought was going to happen on Friday when we couldn't come down and take out this target down here, and we completely reversed. I thought that we were going to start to see higher prices, which we did. And the thought is that we put in this lower this higher low, and we kept on pushing up against this this area right here at I was looking at 75. This target didn't form until after it kind of collapsed, but I was looking at about 75, and it just could not get over that level. And then eventually it just collapsed. Now, this is a very bearish structure right here, which suggests that this low is going to get taken out fairly quickly, more so than this target getting taken out. Now, if Monday comes around and I don't know, something gets tweeted and sentiment just thinks that, I don't know, war's over again or something, I don't know what's going to happen. But if we were to open up here, all of this negativity gets taken back, and the likelihood is we're going to fill this gap up here, and the chances of this now increase of getting hit. But for right now, as is, this is very bearish. I expect us to continue down to take out this low, for this target to not get hit immediately, and for this target as well not to get hit. So the chances are this will get hit. If we open up here and we are unable to take out this target right here, I'm going to buy SPY puts for targeting this area. So let's see if I can. Yeah, so I would buy the 740 SPY puts, maybe 0 DTE. We'd have to see how it's performing up here, and if it's just unable to break it like it is here, and then you start to see a collapse, I may buy the 0 DTE 740s if we start to see something like this, because I don't think we're going to consolidate here a whole lot. I think either we're going to continue the move, or we're going to break up above here. I don't think this is an area where we're going to consolidate. We may bounce up here to try and break this again, the higher level. Let's see here. What was I looking? Let's see. Yeah. We may continue to bounce up here to try and take this out, but I think eventually the likelihood is these lows are going to get taken out right here. And we may just come down to the bottom of this kind of pattern down here. Now, one of the things that I posted in the chat was that the overall option structure matters to my positions, and it matters to the way I trade. So there's a level in the options market that's considered a level at which the dealer is either positive or negative gamma. Now, in order for the market to be positive gamma, the market needs to get above 74.58. That's the level right now, and it's just below it. So it's pretty much at it. But it needs to get above it in order to flip the gamma to positive. If it's positive, then dealers start to they sell the rips and they buy the dips. Okay. So in essence, what they're trying to do is pin price to certain levels. And as long as they can do that, there's some stability in the market, right? There's less volatility in the market. Now, if it's negative gamma, it's the opposite. They buy the rips and sell the dips. Okay, so they add momentum to the direction, and that increases volatility a lot. And so my my way of trading is I like to look at these levels and I trade off of them, right? I thought that there was going to be I thought there was going to be a recovery of this level. And my idea was that to trade it, and if it broke above the 7,500, I was likely going to buy the targets that I had up here in that I was showing you previously. I was going to buy this July 16 target in a SPY call, and that's how I trade. I trade off of these levels, but those levels are only stable if the dealer's involved, right? If they're trying to pin it to the price, because what's going to happen is retail, institution, whoever, they're going to push the price one way or the other. And in some cases, that may force the dealer to try and catch up with price by buying shares in some cases, right? Particularly in some of the stocks that I'm looking at. So that's a type of trading strategy that has gotten me the 86% or whatever in my portfolio, and the 100% last year was that type of trading strategy. So if it's below that TGZ level, my strategy doesn't work very well. It's a generalized kind of statement, and I will probably take positions out of my portfolio just because I don't want to trade this volatility. I much rather trade stability, less volatility. So, yeah, I'm going to keep an eye on that level. This level may change, and according to how it changes, I'll decide whether I'm going to just exit my portfolio or I may just add. So let's look at the NASDAQ real quick. So the NASDAQ is a little bit more bearish. So it came down and hit this double bottom down here. It didn't technically hit it, but it's close enough. And it did bounce some, and there is a bit of recovery, but it's not an impressive recovery. It really needs to get above this 28,940 in order to show some strength. And at that, you would just expect it to come up into this range. And then the next true test is this downtrend line. And then if it breaks that, then, we could be testing all-time highs. But it has a lot of hurdles to get over before it gets up there. So I'm not really banking on that. The NASDAQ is the one that's going to possibly take us higher or whatnot. It may lead the charge to the downside. And a lot of that's most likely because of the AI tech plays that are a lot of the air's coming out of the bubble, it looks like. So let's look at sector rotation. So this is the chart that I normally show with all the different S&P sectors, and I took most of them out because for the most part, all of them are just in the middle. And there's one at the high, which is energy, and it just continues to move higher. And this is from the beginning of the month. You need to look at sector rotation over a period of time, and it appears that it's been this month that we've just had this chop in the S&P. It hasn't collapsed. It's been kind of slowly grinding down, but there just hasn't been an overall collapse, and there won't be if money is coming out of tech, XLK, and going into the XLE, which is energy. And if you add oil onto this, I think somewhere in here. Yeah. Is this oil? Yeah, WTI. I mean, it's following along the XLE. And it looks like it wants to go higher. We'll look at a chart of oil later. But it looks like oil is ready to, it's broken trend, and it looks like it wants to move higher. And it looks as if the XLK, with a lot of these AI names, wants to move down lower. Now, as long as you have this cannot collapse. it's just moving money from one sector to another. This, I think, is at 38%. It's probably lower after this week. Not a heck of a lot lower, but probably a little bit lower. And so eventually the XLE will increase in weight. But for the most part, as long as you have this, the S&P is not going to collapse. But it's very striking how it's, there was this kind of push and pull, and you're going to expect that. You even had the XLK making a move higher. It looked like it wanted to grind higher and that the energy wanted to come back down. But it's just this constant push and pull. But over time, you can see that there is clear sector rotation out of the XLK and into the XLE. So let's see here. Let's go to this one. So let's go ahead and go over. Let's look at the semiconductors. This is a SMH. It's the ETF for the semis. And you can see that they really struggled on this past week. Come down significantly. This line, I showed you a line of the S&P that was in previous videos that the slope of the line going up was continuously increasing. Well, this is continuously decreasing. The slope is moving like that, and eventually you're just going to have this straight down. Now here's the support area at 527. If this breaks, it could fall. It could have a free fall. And it looks like it's picking up velocity to the downside. It needs to get back up over this 558. And look, that's a reality. That the way a lot of these runs get started is on short squeezes. The market is too short a certain sector or just overall, and they get squeezed, and you can start another run higher based upon a short squeeze. But so if this thing were able to get back into this trading range right here, I guarantee you that will push it even higher, just based upon people getting out of shorts or getting out of puts, whatever they're in, that they think that the market's going to go down lower, and it doesn't. It goes against them. People, the fear is much more of a stronger emotion than greed is. Okay. And so people will quickly get out of their positions, and it will push this market higher. So keep a lookout on that and see how the behavior of the market is now. I know it's been very choppy, but overall, it's just been kind of grinding lower in the semis. And this has been the mainstay of the market moving higher. So if semis are going to come down, again, we want to look for where that money's going, and most likely it's going into energy. But if this thing starts to accelerate to the downside, it's going to take the S&P with it, and along with technology. So let's look at some of these tech names. MU, you can see the clear bounce in MU. And I took this trade thinking that, hey, we're coming back up to the support area. It's going to move higher, and it just completely collapsed. So it didn't work out. Oh well. I'll take more swings elsewhere. SanDisk, it's right at support. I mean, you could even say it kind of came back to support and broke it. If this thing wants to continue going down, probably the next level for this one is right here. So at 1293, let's call it 1300 even. And then if that breaks, boy, you could seriously be coming down pretty hard to around maybe 1,000. Yeah, this one is the weakest of the memory and the semis. Western Digital, I mean, it bounced and it stayed relatively up here, but I think it's just a matter of time before it retests this support. NVDA is still kind of strong a bit. It's staying above support. Overall, it's rolling over, but man, I just don't. This thing set up so many bear traps that I really don't want to short this thing. AMD bounced. It bounced out of, or it came out of this range, and then it tried to get back up there and stay up there, but now it's breaking down again. So you can clearly see that these things are not remotely bullish anymore. But some of them have come down quite a bit that you would expect maybe a bounce or two. It filled the gap, and ARM filled the gap, and it has a ways to go till support at 203. You know, and all of these have this kind of M pattern, which is kind of a distribution type of pattern, and they're breaking. You can kind of think of it as a head and shoulder pattern. They're breaking these necklines. Intel, I think Intel reports this week. And if this thing breaks at 91, which, I mean, if it probably happened on earnings, this thing's not giving it. Hold on. Let me let's see here. Oh, all right. Yeah, I mean, it could come down to the support at 66. Look for earnings to see whether you get a pop or drop. The way it's coming down, it could go either way. You know, the main thing with these companies is if and it's also for the hyperscalers, CapEx is the killer for them. If Intel comes out and says, hey, we're going to have to put more money into CapEx to keep up with demand, that's not going to be bullish. That they're going to get hit hard. Same thing with AMAT. I bought AMAT thinking that we were going to see something above this level at 528 and a move higher, maybe fill this gap, and it didn't. It just completely dropped. And you know, these things ran pretty hard, pretty high, and they ran away from support. And that's not a stable structure. That's a house of cards right there that's going to collapse eventually back down to the support area. AVGO's just trending down. I mean, it's pretty far away from support at 300. MRVL bounced off support. The question is whether it comes back down and tests it again. ANET bounced pretty well, and it got back into this pattern. So the question is it going to stay in that pattern or not? And my guess is it's not. You know, when you see these types of patterns and they come all the way out to the near tip of it, it's not a make or break type of scenario. You still may see violent moves, but they typically don't play out very well, in a sense that what the expected should happen when they go this far into the pattern. When they're about the middle to maybe 60% of the pattern is when you see that breakout, you definitely want to take that, because that's going to be a significant move. This thing could just continue to consolidate and not do anything, right? There would be no play in it. You would think that it would break out and like something like this, and it was going to move higher. It didn't. It was too far in this pattern. If it was here and it broke out, then that's a different story. So I think for the most part, here's the data centers. IREN, oh my God. I'm actually kind of happy this one is collapsing. This looks a lot like CleanSpark. It's just been trading within this range for such a long time. CIFR's come down quite a bit. I mean, I hate to say it, but it looks like the run is over in some of these things. Yeah, CleanSpark has just been real choppy, really hard to trade this thing. Software. So Microsoft is just struggling. When are their earnings? So it's the end of the month, but it's really struggling. It looks like it just wants to either grind a little higher or just consolidate and then roll over. Now is reporting this week. So if you're in any software plays, keep an eye out. You may want to maybe protect yourself by, if you're long, buy a put, because if now reports bad earnings, it's going to take the whole software sector with it. And it may come down to the support area at 89, or it may just pop. I don't know. It's such a gamble, these earnings. I don't like playing. I don't like being in stocks during earnings unless I'm significantly up. And even at that, I like to protect myself if I'm in it. I may protect my Adobe position by buying a put or something for this week, according to see how it plays with the now earnings. But Adobe's just grinding higher. It has a ways to go before it hits resistance. Workday is pretty close up to resistance. If this thing breaks out above this 153, it's a long. It would be pretty extended. My expectation is it would come up to this resistance and then put in a lower low. Maybe something in this, you can maybe divide this up into maybe something like this. Okay. Maybe something like this, and maybe it bounces up here, comes down to this level, and then moves higher. You know, this Workday is in a lot of businesses. I don't think AI is going to replace it. It seems to be essential. Team's just kind of grinding higher. It's within this kind of range area. It has resistance up here at 106. FICO looks like it kind of has this bit of head and shoulders type of pattern, inverse head and shoulders type of pattern. If it comes back up here, it's definitely a buy if it breaks. So keep an eye on 1334, maybe 1335, and it'll trade within the top of this range up here. Bitcoin. So, you know, as much as I've kind of jumped in and out of Bitcoin, and I'm still in it right now, it is putting in this kind of inverse head and shoulders type of pattern. But it's struggling, it looks like. I don't know what's going to get this thing going higher. Maybe maybe if the Fed comes out and is more dovish, which I do think they're going to eventually be. Nobody wants to be a hawkish Fed official. Nobody wants to be the guy with the bad news. And I don't think Walsh is like that. I think he's gonna be dovish at some point. That may get this thing going. But it's just buying its time, it appears, before it makes a move. So, I mean, it's just kind of neutral. I'm still holding it. I think I'm average is around close to 65, 5 or something, maybe. Ethereum has really moved pretty well. Yeah, it just needs to stay above this 1835 and then maybe start shooting up to 2000. So I think that's pretty much. Let's go over oil. So oil looks really good here. But you got to keep an eye on the fact that this thing is Twitter driven. Okay. It's social media driven. And if you get caught in some of these oil plays and you get caught in this political nonsense, you could get your butt handed to you. So I'm not going to take options in some of the plays I'm going to show you in a minute. I'm just going to take shares and minimize for risk. So I don't want to be leveraged into some of these plays, but you can see that this downtrend line, it got broke. It broke up above it, and it wants to move higher. It looks like. Let me see here. Let's look at it on the 5-minute. Yeah, it broke the right here, broke the downtrend line. And now it's just kind of consolidating up here. And I mean, it's pretty close to these highs. And it's just been grinding higher, as you saw with sector rotation. Let's look at, gosh, what's going on with my screen? Hold on one second. All right, sorry about that. Let's see here. So let's look at some of these oil and gas names. So CNQ, these things have reversed. The AI names are down here. They look like right here. And the oil have completely reversed on a lot of these names. COP is right at this downtrend line. If it breaks it, I mean, it's hit it so many times that you would think that if it broke it again, it's going to move higher. EOG is the one that I'm going to be looking at the most this week. I really want to get into this. This thing looks really bullish. It's up against this downtrend line. It hasn't broken yet, where some of these plays have broken and they've gotten away. I'm not going to chase some of these. It's really, really important for me to get good price positioning in these plays, because if they're so, like I said, so sentiment driven that a tweet could literally take me out. So I want to make sure that I get in at good prices. And EOG, of all the ones that are on my list, looks the best right now. And it's just forming this kind of consolidation pattern. And it's up against this downtrend line, which has hit twice before. And it looks like it's trying to break through. So I will probably take a play on Monday if it's still in this area. And just buy a position here. EQNR hasn't come quite up there, but it's taken this big dip back. And it's back within this trading area right here. CVX. So like this is a case where CVX has clearly broken this downtrend line. It's moved higher, and I don't want to buy it up here. If I saw significant strength, then I would, but I really don't want to buy this up here. I don't want to chase it. XOM, I would prefer XOM over CVX. If it were to break, if it was to start breaking this downtrend line. Devon, I mean, some of these are right at the trend line, and it's respected it before in the past. So if it does the opposite, and it breaks through, then I want to take a shot at it. I want to take a swing at it. APA, Oxy's not there yet, but it's moving towards there. Oxy may be another play. This pattern is not particularly bullish because of this incredible or significant downturn, and it hasn't taken it completely back yet. It's trying to, but it hasn't. Suncor Energy is a bullish pattern here. You could see that it's taken back all of the correction. Right, it's above here, and so this is very bullish. This is another one I would probably look to get into this week. So the next level would be, well, we'll just say it's this resistance level up here. So and then if this rolls out of if this now becomes, if this support now becomes resistance and it falls under it, then that's my cue to get out. So so far right now, EOG, Suncor are the two. CVE. See, this is a case where it's broken and it's come back, and now it's back up to this the swing high, and that's a sign of strength. That's something I like, right? It's not just completely going straight up, and I'll show you one in PVF that's just mooning right now. But in this case, it's come back down. It's tested this level down here. There's probably some kind of support level right here. Let's see here. Right? There's a support level. It came back down, tested it, and now it's moving higher. And I love to see this. This is very, very bullish. So CVE is one, EOG, Suncor, and CVE. Val, Belarus, this thing is weak. And this is one of the reasons why I don't want to take NE. It did come down and test support and then moved higher, right? Right here. It came down, test support, and now it's moving higher. So there is some sign of strength here. I know some of y'all have followed Rob into this this trade. So this is looking like a reasonable swing right here. But I when I look at Valeris and Rig, good Lord. I mean, this whole sector or this area of oil and gas is not looking good. It concerns me about NE. And I could just be completely wrong, and this thing could moon, and I hope it does, because I know some of y'all are in it, and I don't want to see anybody lose money. But that's kind of one thing that's kind of holding me back to take a position in NE. Tidewater, it looks strong. And I think I mentioned this last weekend. When was it? Yeah, I mentioned it when it was up towards this downtrend line, and it looks really good. It's moved through. It's going to test this resistance up here at 77. If it gets above that, the next area is going to be 85. And it would have taken back all of this. This would have been a buy the dip opportunity here. Woodside Energy Group. It's not something that looks interesting right now. CRC. Let's see here. It's right at that downtrend line. Not bullish enough right now. Seadrill, it's kind of consolidating up here. It's probably going to move higher and fill this gap. I mean, it did fill the gap, but not up here. It'll have a hard time getting over this resistance area up here. SUBC. I'm going to put in this little reversal candle, but it really needs to get above this 318 and show some strength to get back up to the top of the range. It didn't come down like a lot of the other stocks. So SUBC was really good. It just grinded higher for such a long time. So this may be one to get back into. Let's see here. Schlumberger. Come on. Yeah, this thing looks weak. It looks like it wants to retest the support down here, 46.58. Maybe it tests it again, puts in a higher low, and moves higher. But I don't see strength right now. I don't see a reason to get in right now. Baker Hughes, same thing. Hall looks a little bit stronger, but it still doesn't look like it's ready to set up a swing just yet. Core Labs, nothing. Nabbers, Ugh, it's kind of neutral, I would think. Yeah, I don't see something right yet there. Repsol looks bullish. Okay. I would definitely look to see. I mean, you could take an anticipatory trade right here on the move up to this top of this range, because once this range breaks out, it's going to move. You could see here, it was range bound for a while, and it went from the bottom all the way to the top of the range and then moved significantly higher. It could certainly move significantly higher off of this move right here. It corrected some, moved up, corrected some, moved up, and it looks strong. It looks really, really strong. This is definitely on the list. So EOG, CVE, Suncor, and Repsol. I like this one looks really good. EOG still looks the best though, but how about PBA? PBF is the one. Good Lord. Man, can you imagine? I think there's somebody in the Substack that's in this right now. Good for you. Hold on, man. I hope this thing freaking moons. It's really extended, but it's wanting to go higher. I think when I looked at this on a DeMark level, it was on its second daily exhaustion level. But this doesn't look like it's ready to. It's showing much exhaustion. It could easily consolidate or maybe even pull back a little and then move higher. I would not get out of this unless it broke the swing low right here. So something around, I mean, I would probably put it at 56 from here. That's a big drop from 62, but yeah, I mean, this thing looks really bullish. I think this was originally brought up in the bottom up bulletin Substack when it was down here. And gosh, I can't remember who it is. Some celebrity, Carlos Slim, I think it is, was in at maybe like 25, and it continued to move lower. And somebody brought it up, said that he had taken a big position in it. And man, if he's still in it, I mean, he's, I don't know, one of the richest men in the world. He could be challenging Elon for depending upon how big of a position he took. But yeah. And there's certain people that you want to keep track of what they're buying, and that was a really nice tail right there. Let's see here. Nothing there. PBR. Petrobras. There's another Substack I'm in that one of the analysts suggested that to buy Petrobras, and I want to say he did that. It's just the daily. I want to say he suggested it somewhere down here. Maybe a little on this bounce right now, but and I forgot all the reasons why he suggested it, but it was his top pick for his investment firm. This one and Fro was his top two picks. This is more of a freight type of shipping. Are there any more oil plays? SM. So yeah, here's one that's bullish. This one's getting added to the list for sure. I don't know where I would buy though. So maybe on this break. Did it break already? Yeah, it already broke. So I'd be chasing if I bought here. I don't want to buy here. If it came back down a little and corrected, then I would. But I like how it's back into this trading area. It's back above Well, I could take this horizontal level right here, right? Once it breaks there, and then I'll buy there, and if it falls back below that level, I'll get out. So that I may take this swing as well. I like it when it's back up above this trading level up here. Is there any more? I think that's it. So EOG, CVE, Suncor, Repsol, and SM are the ones I'm going to be looking at this week. And in terms of the portfolio, I'm going to get out of MU and AMAT. I'm not sure about Bitcoin. I don't know if I'm going to hold on to that. It does still look bullish, so I may just stay in that. XRP, I might just stay in that. It's not hurting me a whole lot, so I may stay in those plays and just add oil and gas plays to it. Strictly shares, no options. And hopefully I can get back up above 90% gains and go from there. So that's pretty much it. So hopefully everybody's having a good weekend, and we'll go ahead and stop there. Okay, thanks.